Saturday. I think a lot of folks probably have more interesting things to do. This is hopefully an interesting talk in the context of the last one that we had and where we left off, which is more institutional assets coming onto Solana, onto blockchains. What I'm going to discuss today is the impact that I think stablecoins have on Sol and Solana, and there's a tension there that I think is worth being addressed. We're going to talk about that. So quickly, who I am. My name is Wyatt. I'm based in the Boston area. I'm an investor at Solana Ventures. My Twitter's up there in case it's of interest. We're a $250 million venture fund. We actually spun out of Fidelity, the Fidelity Digital Assets team in 2018. I would say we've made our name in institutional assets, institutional development around blockchains, and we are investing in accompanying infrastructure, with stablecoins being a major theme there of our work over the last few years. So a quick agenda today is going to be, what does Solana look like right now? Quick update on what the last couple of years have looked like. Stablecoins on Solana and where we're seeing development there. What is monetary value in crypto? Which I think means that you're going to have a certain amount of capital in crypto markets, and that's a finite number. Each day it might grow or shrink, but there's a pie that is going to be split among the assets. And I want to talk about what that looks like. And then we'll have closing, where we'll leave some discussion topics and hopefully have time for a couple questions. So Solana's had a great run. It's been a really fun time to be in the industry. I think Solana's been a major driver of that over the last couple of years. We've seen Sol prices going up. A lot of us have probably enjoyed that. It's pretty simple, obviously. Solana TVL at the same time has grown immensely. If you go back to when we were at this conference maybe a year or 2 years ago, also been a fun ride. And then we've had outperformance of Ethereum, which has, I think, been encouraging for everyone in the room. We had a conference yesterday focused on Ethereum, so it's been an interesting market trend. I want to talk a little bit more about, I think, why that maybe has happened, and then where we can expect to go from here. So stable coins have been one of Solana's leading narratives, which I think makes a lot of sense, because people think about stable coins as a payment system, which largely they can be. And with the low cost and speed of Solana, there's potentially an intrinsic fit there, but I want to think about what the potential ramifications of that would be and what that would look like. We've seen a notable uptick in stablecoins in Solana. I would say, interestingly, if you think about a bull run that kicked off sometime late 2023, maybe people would say it was leading into the 2024 administration change, we saw this major inflection a little bit after that. So I would say we really picked up late last year, and we've seen a lot of interesting growth since then. At the same time, peer-to-peer stablecoin transactions are up. The number of stablecoin addresses, the people using stablecoin on the chain are up. This is thanks to Helios. So there's lots to be excited about in this thing, and I think people are. The question I want to pose is what impact will that stablecoin build-up have on Sol, the asset Sol? I want to draw our attention to two charts here. One is the stablecoin supply on Solana on the left, and two is the price on the right. And I don't want to make a pure causation argument, but I think if we look at the timelines in effect here, if you look at mid to late 2024, we had this major inflection of stablecoins on Solana, something people were very excited about, like I mentioned earlier. At that same time, I wouldn't say we had an accompanying appreciation Sol price. I'd say we had a choppy time, and we had this major run early on in Sol, where you look at late 23 to mid 2024, and then we had a bit of a flattening. At the same time, the stablecoins were really inflecting. So you have to question what's happening here, and why do these two charts not look more similar, would be my question. On Ethereum, we actually see a similar thing, so I want to draw our attention that I don't think this is a Solana-specific phenomenon, where we saw an inflection of stablecoin supply on Ethereum. It hits an all-time high than we ever had, speaking of institutional assets, I think you were talking about earlier. And Ethereum price had a similar trend. I would make an argument that the recent Ethereum price appreciation we've seen has been the result of DATs rather than enthusiasm about stablecoins. That's a separate issue. But again, I think we see that these trends look different on a similar time frame. We might laugh at this, or we might think it's categorically different, but I would say that you look at Bitcoin, XRP, and some of these assets where you have a chain and a native asset. These assets have been incredibly strong from a price appreciation perspective, and there's no present stablecoins there, which I'll get to this, but I think might actually benefit those assets. So in that vein, I propose that on-chain stablecoin supply is uncorrelated to or threatens Sol and other native chain assets. So why is that the case? It hits at this issue, what actually is monetary value of crypto? And I think early on, people decided Bitcoin constitutes some form of monetary value, store of value. I completely agree with that. And there's been a long question of, okay, do these other assets have value? When we look at Ethereum, when we look at Solana. And then I think you have to argue stablecoins too, because they're US dollars on the blockchain. So you start to get this potential competition. And I would say that in this vein, stablecoins struggle for monetary value with native chain assets. There's a tension between the two, and they coexist, but potentially take share from each other. I want to talk about the notable trends we've seen on Solana versus Ethereum and other on-chain environments in this vein. The breakthrough applications you've had in the last couple of years in the Ethereum landscape, a couple of them Athena, Pendle, and Morpho. The focus in these products, which are extremely intertwined, again, a conversation for another day, is that there's a pursuit of consistent yield, and specifically consistent yield on dollars or dollar-denominated assets. On the Solana side, we've seen the proliferation of assets that help you capture value from alt assets. So there's a speculative form to it. There's an element of fast-performing trading systems, which I would argue is notably different from the premise of maximizing stable yield. So this is an Ethereum perspective. But I want to look at the top assets in Aave in March 2024 versus the top assets in September 2025. What you'll notice is that in early 2024, you can tell by the supply assets here. So we have a lot of ETH, we have a lot of BTC or WBTC. We have some alt assets further down, like Link, and then we have a lot of stablecoins, USDC, USDT. In a nutshell, the prime behavior happening here is that people are taking Ethereum, they're borrowing USDC, and they're buying more Ethereum, and then they'll likely do that again. So the use case is to be as long Ethereum as you can be, or maybe you'll borrow Ethereum and functionally be short Ethereum. If you look at September 2025, there's still a decent amount of that, but we've seen things like PTSUSD and PTUSD rise here. Those are yielding stablecoin denominated assets. So the use case there is people will take those assets, which might have 8-9% yield, they'll borrow USDC, and they'll buy more of this PTSUSD, which is meant to drive more yield. So if you have a 6% borrow rate, you have 9% yield on the USDE asset, you get a 3% margin there. So people just borrow that to try and up this stable yield. This is called looping, which a lot of people might know or participated in. And it's a very functionally different behavior than longing alt assets. And capital competes between these two use cases because there's a finite amount of capital in the system. The other thing I'd note, which isn't captured here, is perps have really emerged as potentially a better way to express long or short views on assets, which takes away from this hold ETH, borrow stables, buy more ETH use case, whether that's ETH, Solana, whatever asset it is. I would also note in this stablecoin landscape on the Ethereum side, we've seen stablecoins that have emerged and started to compete or have comparable size to a USDC or USDT. So you see 75 billion, 45 billion, and 12 billion. That's in the ballpark, is what I would say. And then on the Solana side, we really haven't had another breakout stablecoin, which I think is notable when it comes to the value that Sol maintains, or the monetary value. So I'd note, if we look at Athena TVL versus Ethereum price, we see Athena TVL goes up and to the right. We go from 0 to $15 billion worth of TVL, and that's a lot of assets on chain. On the Ethereum side, we see this appreciation run late, but it's overall flat or choppy would be my characterization of that timeline. So what also happened in that window is we saw this market outperformance where Solana outperformed ETH, and I would argue that a major participating factor there is this proliferation of stablecoins on Ethereum which compete for value. But herein lies my concern, is if we have some of the largest token launches in the industry happening on Solana, and the pairs are denominated in USDC, I think you have to ask what's going to happen on the back of that. What does that mean for Sol? And my argument here would be that chains are like nation states. They each have their own assets. We have our own in the United States. A lot of countries have their own, and this hits on some of the stablecoin tension globally. And then something like an Ethereum, Solana, they're nations in themselves, they have their native assets. And when stablecoins come, that creates a competition there domestically. Alternative forms of monetary value inherently threaten the value of nation states' native assets. I think this is particularly relevant now. I meant to give this talk a while back, but it's really bubbling up just this week. There's a battle for being hyperliquids, USDH, canonical stablecoin, which many people probably followed. It's very heated for a lot of different reasons. And then there have been some in the Solana community who talked about the idea of having a Solana native stablecoin and the role that stablecoin should play in Solana and that as a potential revenue stream. So the key questions I would have to leave off here is it worth encouraging this proliferation of stablecoins at the expense of SOL price or at the shorter medium-term expense? Should Solana have a native stablecoin and to that point encourage stablecoins? And are these real-world assets or assets that will compete on-chain for our on-chain native assets? Are those really what we want? And I'll pause. We have a few minutes for questions. Yeah.
Okay. Are we looking at more institutional stablecoins coming out?
Now, or where do you see the future of like alternative stablecoins, like you've got ETH-backed stablecoins, Bitcoin-backed ones?
Yeah.
Do you see like some sort of fight in the future, or it'll be 50-50? Or?
Yeah, there are a couple times types of assets we'll get that are stablecoins, institutional assets. One are what I would call more on-chain or protocol native assets. That's like an Athena, where it's a crypto protocol, they're an asset issuer, and those assets can exist on chain. The other type is if Fidelity or BlackRock has a credit fund or they want to issue a stable coin and they put those on a blockchain. And it's a question of whether those will be on a Solana-like chain or if those will be on Plasma or a stablecoin native layer 1 or on Fidelity's own chain. To that point, I think a lot of the assets that come on chain will be in this credit vein because there's something called the Clarity Act, which is a major piece of legislation. My view is hopefully it will pass mid next year. I think other people have more aggressive, other people have more conservative views. I think after that, most of these stablecoin or equivalent assets, institutional assets, will be from those institutional actors because it opens up what it means to have an on-chain asset, what it means to have an on-chain security. So I think that's where most of the assets will come from. It's a question, and then, of whether it will happen on Solana or not, and then I think whether you want it to happen on Solana or not. I think a different argument is that we'll have a landscape of blockchains with different use cases, and we can pivot Solana's use case, but that might have ramifications for Sol's price, it might have ramifications for the ecosystem.
Any immediate thoughts on Tether's new stablecoin that they announced?
I like the ticker a lot. It's interesting. It's almost like it sounds aggressive to say. I think this few months lag where they've had trouble operating, gaining mind share in the U.S. on a relative basis will be harmful in this market. But I'm of the mindset, if I were Tether, I'd almost be focusing on all the market opportunities they have elsewhere. I think they have so much going for them in emerging markets. Finance peer-to-peer is a massive system that we don't have an appreciation for. So I'm interested to see how that goes. I don't have thoughts on how they'll do for now because I think it's too early. I do think a lot of the new stablecoin issuers coming in have been, I didn't appreciate the network effects of Circle as much until recently. I think it's going to be harder to crack in than I would have said it would have been 6 months ago for anyone else, institutional or crypto native.
Yeah. Do you see there being any competition for USDC coming out of state-issued stablecoins or even bank-issued stablecoins?
Competition, no. I think Circle is really well positioned in the short to medium term, and it's proven difficult to bootstrap liquidity and grow these things and get people to use them. I think that organizations like PayPal will encourage within the closed loop people to use their stablecoins, but I think it's difficult to grow it outside of that network. I think people underestimate that. What I think will be really interesting is how Circle and other USD stablecoins are breaking into other markets, because I think there's a natural pull factor if people in other countries want access to US dollars. That's just been validated by the growth of Binance P2P, by the growth of Tether. So long story short, in the US, I think it's going to be hard to grow those products if you're a bank, if you're a company. Globally, I think you're going to be defending against US dollar stablecoins.
institutions issuing protocol-specific stablecoins, decentralized stablecoins. As these continue to pop up, do you think we're going to continue to see sort of like this permissionless expressivity with all these different stablecoins, or do you think we're eventually going to start to see sort of convergence in usage?
Convergence, like, will they all be kind of the same asset, or will they be KYC?
Or like fewer people are going to tend, or people are going to tend to use fewer stablecoins rather than the massive spread that we're just kind of starting to see.
I think there will be sort of a distribution rule where the top 2 will be 90% of the market, and then there will be a really long tail, because if I can issue a stablecoin and get $20 million of holdings behind it, why wouldn't I? Like, I'll take the $200,000 that everyone can make off of it. So like, people will still do that, especially because you can white label one with Paxos or with some of these companies. Braille's another one. It's a little bit like, why not? But I think it's harder to grow than people thought. I think if you talked to some of the institutional actors like 16 months ago, they're like, oh, we'll launch one, we'll have $100 million on day one. And it does if you put the money into it. But it's hard to bootstrap these markets and network effects. Another thing, so we did a stablecoin study a couple of years ago on adoption patterns. And if you ask people globally why they use which stablecoin they use, they'll say like Tether, because I've used it for 4 years, I trust them, like I just know more about them. Which like may or may not be true in terms of like what you know, but there's a real stickiness to it. And I don't think that you're gonna have that same flywheel quickly with new stablecoins. Yeah.
So it's there's a lot of talk about the USD stablecoins. What about the euro or the Swiss franc or the British pound? Well, BRICS nations as well.
So this is not financial advice, not advice of Castle Island either, or not indicative of our firm opinions. I'm a major believer in those kinds of assets, and I think that people took a view that because we've seen such adoption of US dollar stablecoins, we're not going to have other assets that prove the dollar dominance. I think it's the opposite. I think we didn't have a need for on-chain euros, for on-chain pounds, when there were only $10 billion, $10 million worth of US dollar stablecoins. But now that there's a larger market there, I think they're going to have to exist. The primary reason I think they have to exist, the US dollar stablecoin has been used a lot for remittance. So you want to send dollars from the US to India, US to Mexico, to the big ones. It's a really efficient way to do that. I don't think you're going to have the emergence of, let's say, euro stablecoins because of those same flows, because that's just not as big a use case. I think you'll have it because if you're a business like Anchorage or Coinbase UK and you want to do business in the UK, you are going to have a GBP denominated asset on chain. I'm a firm believer that structurally, I think regulators are going to push for it. You can't have all of the cash, all the monetary value on chain sitting between dollars and potentially Bitcoin or Ethereum if that's what people are holding. So I think those assets will emerge at scale. I think that's going to be a really interesting category in the industry.
Will you see a conflict between the CBDC European one and the euro stablecoin?
Yeah, so I mean, this is a bit of a longer conversation, but in each market, it can either be a venture-backed startup that issues, let's say, a euro stablecoin. It could be a consortium model of banks. It could be an individual bank. It could be a government. And that's going to depend on the regulatory stance in each of these markets. Some of those are still being fleshed out. In Europe and the UK, I would hunch to say that I think it's going to be, there are going to be a couple of startups that do well. And these markets will only become sizable in probably 3-4 years. But it depends on the environment in each what that's going to look like. All right, thank you, everyone, again.